Hi guys and welcome to the trading show. This week we are gonna talk about
markets, stock indexes slow down. Our portfolio $12,605 with one system. Tip of the week, focus on gold future and the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Well, let's start with the equity indices. We see a decline more or less in all indices, in particular on the European ones, Eurostock 50 and DAX, with a -5%. The decline on the mini S&P is more contained, -2%, while the Nasdaq is substantially unchanged. As we know, we have had strong increases in the previous months, and therefore it is quite common to see the markets return part of these gains. So at the moment we are therefore in full correction phase. It is also worth noting the trend of metals, which all show significant drops, in particular the silver with a -15% in the last week, which had shown in the previous weeks the very strong increases, and the same goes for platinum, copper and also for gold, even if the latter shows a more contained decline. The unusual thing is that often metals and stock indexes show opposing dynamics. In particular, metals are considered safe assets, so we often see a drop in stock indices, as we have seen in the last 2 weeks, and a simultaneous rise in metals. Well, in the last 2 weeks, this has absolutely not happened. We have seen a decline in both equity indices and metal sector. We also see generalized declines on the whole agricultural sector, cereals and soft commodities, and on both the currency sector and the cryptocurrencies. Bitcoin future shows negative returns over the last week with a -2%. Obviously, with such a week, it is normal to see volatility generally rising. With regard to equity indices, the percentile values are very high on the monthly and annual time frames. The same goes for the implied volatility. Here we see the term structure of the volatility indices on SPX, and they are all increasing compared to the values of about 1 month ago. But this aspect is even more evident if we analyze the term structure of the VIX futures that we can see in full backwardation, obviously except for the first maturity, which as we know is the one prior to the outcome of the American elections. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi guys, from Alessandro Danos, and welcome back to this new appointment with the analysis of our portfolio. This week we will talk about this system that was developed on the metals markets, but that now is working also on DAX, platinum and many other instruments. We can see from the performance report that on platinum, on DAX, the strategy was really good. Also on the platinum futures market, the strategy performed well. We see he reached new peaks. And at the end, also on the gold futures market, this trend following strategy reached new peaks. More specifically, we can see that the gold managed to reach a profit of $4,460 with commissions and slippage considered. Also on the platinum market, the strategy managed to reach a $2,395, and on the DAX the short produced a return of 5,750 euros. Taking the monthly profit of these three systems to over $12,000 in the last month. Well, now we take a look at the Titan, that we know is the software we use to choose the system to trade, and in particular we will focus on the metal markets. That, as we know, it includes gold, silver, copper, platinum and palladium. So we will limit the strategies to only metal sector. We have set as starting capital $50,000 with a daily risk of 2%. That means that in the same day you will not be able to lose more than 2%. The data starts from January 1st up to today, September 25. And we can go immediately to see what are the results produced by the use of the Titan regarding this particular sector. We see that here the annual equity is very positive, with a total profit in 2020 of about $32,000, against a drawdown, we see it here, that was done in February and March of $6,000, bringing the ratio between net profit and max drawdown to a level of 5 times. That is, I must say, very beautiful. We can see also that in the monthly progression, obviously profits and losses are alternated. We see here in February $5,300, a great March with a performance of almost $20,000. Then April flat. In May another profitable month with $4,000. Then in June and July 2 flat months. And in August again $4,500 gained. This performance are considering the commission cost and also the slippage risk that could occur in live trading. In the last month of September we can see a loss of around $900. Overall, we see it here in the performance summary. We can be satisfied with the performance recorded by the metals market with the use of Titan in the year 2020, where we see that profits reached $32,000 at the moment, compared to a maximum drawdown of just $6,500.
Hello everyone and welcome from Andrea Unger. Today we will see more in the details the gold future. So first of all, the gold is a future that is listed on the COMEX market, and the COMEX market is a branch of the CME group of Chicago, and gold future has a session that lasts 23 hours a day. And in fact, the session goes from 6 p.m. of the Sunday until 5 p.m. of Friday. And every day there is a pause of 1 hour between 5 p.m. and 6 p.m. New York time. So, in few words, the gold is opened from Sunday to Friday, from 6 p.m. to 5 p.m. and every day there is this pause from 5 p.m. to 6 p.m. Usually it's a quite expensive market because the big point value, so the coefficient multiplier is quite high. In fact, the contract unit is 100 troy per ounce, and it means that for each point of movement of the gold, you will see $100 of movement in terms of oscillation of the profit and loss on your account. And the minimum price fluctuation, so the tick size, is 0.1 point, and so one tick is worth $10. Gold future in general is a quite liquid market, is a very liquid market. In fact, usually the volume are about 300,000 to 450,000 contracts per day, and so it's a quite tradable market, but you have to pay attention because during some news releases the volatility may increase a lot, and this may be extremely dangerous. Moreover, during the release of the non-farm payrolls, that is on the first Friday of the month. For who doesn't want to trade the whole contract of the gold future, we can see that there are some different alternatives, and the first one, that is in my opinion the best one, is the micro gold future. And the micro gold future is really similar to the gold future, but the value of the multiplier of each point is $10 instead of $100. So this product may be quite good for who wants to start trading on the gold without risking too much money. And this product is also extremely tradable. In fact, the average volumes per day are quite near to 150,000 to 200,000 contract, and so it's extremely tradable. But of course, you have to pay attention to have a quite good average trade, because during the volatility explosions, it may be dangerous anyway. And the tick size of the micro gold is the same of the gold, so is 0.1 point. But of course, in this case, because of the big point value, or the coefficient of the multiplier is $10 instead of $100, of course the value of each tick size is $1 instead of $10. We can see also from here, from the CME website, that the contract unit is here 10, and is listed, of course, the price quotation of course is US dollar, and the minimum price fluctuation here is $1. There are other two alternatives. The first one is the E-mini gold future, that is also listed on the CME, on the COMEX exchange. I don't want to say anything else about this product because it's very illiquid. You can see also from this chart that is significantly more illiquid than the micro gold. So it's better, in my opinion, to trade the micro gold with more contracts instead of trading the mini gold, because this illiquidity may be extremely dangerous. And the last one is the mini gold future. The mini gold future here is listed on the ICE Futures US exchange. That is part of course, of the Intercontinental exchange. And this product is not suggested, in my opinion, to people who want to trade the gold for the first time, because unfortunately the ICE exchange in general has a very high has a data feed that is extremely expensive, and its cost is about $115 to $120 per month. So in my opinion, trading the micro gold future from the CME is a better alternative, just because of the costs related to the data feed.
Okay guys, futures rollovers for the next week. On September the 28th there will be the settlement date of platinum and natural gas futures, but as regards the latter, we have already active on November expiration. Then on September 30th there will be the settlement date for sugar, heating oil and gasoline. As regards sugar, we are already active on March 2021 expiration. And finally, we will have the settlement date of the live cattle on October the 2nd. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, Go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.